Breaking news rocking Wall Street right now: Nvidia, the most powerful chipmaker on the planet, is watching its stock tumble amid explosive concerns that its cutting-edge artificial intelligence chips may be finding their way into China through backdoor channels, and investors are running scared. That's right, shares of Nvidia, the Santa Clara-based semiconductor giant that has become virtually synonymous with the global AI revolution, dropped sharply today as alarming reports surfaced suggesting that despite strict U.S. export controls, Chinese entities may be obtaining access to Nvidia's most powerful AI processors through third-party resellers, shell companies, and indirect purchasing networks spread across Southeast Asia and other regions designed specifically to circumvent American trade restrictions. Let's break down exactly what's happening here. The United States government has spent the last 2 years constructing an elaborate and aggressive export control framework specifically designed to prevent China from getting its hands on advanced semiconductors that could supercharge Beijing's military capabilities, surveillance infrastructure, and state-sponsored AI development programs. Nvidia's flagship chips, including the powerful H100 and A100 processors, were placed under strict licensing requirements precisely because of how transformative they are for advanced AI computation. But here's where it gets explosive. Intelligence reports and investigative findings now suggest that despite those controls, sophisticated networks of middlemen and intermediary companies have been operating in countries like Malaysia, Singapore, and the United Arab Emirates, purchasing Nvidia chips through legitimate channels and then allegedly routing them onward to Chinese customers who are absolutely not supposed to have them. And that has Washington furious, investors nervous, and Nvidia sitting directly in the crosshairs of an intensifying geopolitical firestorm. The stakes here cannot be overstated. Nvidia commands approximately 80% of the global AI chip market. Its technology isn't just powering ChatGPT and Google's AI tools, it's the backbone of virtually every major artificial intelligence breakthrough happening right now. The idea that this same technology could be quietly flowing into China's AI ecosystem, potentially training military systems, enhancing surveillance networks, or accelerating weapons development represents exactly the kind of national security nightmare that regulators on both sides of the aisle have been desperately trying to prevent. For Nvidia specifically, the legal and regulatory exposure here is enormous. If U.S. authorities find evidence that the company failed to implement adequate safeguards against this kind of diversion, even indirectly, the consequences could include devastating fines, tightened export restrictions that would permanently shrink Nvidia's addressable market, and the kind of congressional scrutiny that keeps corporate executives awake at 3 a.m. CEO Jensen Huang has already been walking an extraordinarily delicate tightrope, trying to maintain access to China's enormous consumer market while simultaneously reassuring Washington that the company is a trustworthy national security partner. And today, at least for the moment, that tightrope snapped. Investors who had piled into Nvidia stock at historic valuations. This is a company that briefly crossed the $3 trillion market cap threshold earlier this year, are now asking hard questions about regulatory risk, potential revenue disruption, and what a more aggressive crackdown on AI chip exports would actually mean for the company's spectacular growth trajectory. The broader market implications are significant too. Nvidia's stock movements have become something of a barometer for the entire AI investment thesis. When Nvidia stumbles, technology stocks across the board feel the tremors, and today is proving to be exactly that kind of day. What happens next depends heavily on how Washington responds, whether Nvidia can demonstrate it has robust safeguards in place, and crucially, whether investigators find direct evidence linking the company to these backdoor transactions rather than holding third parties responsible. One thing is certain: in the race between American technology dominance and Chinese ambition, the most valuable chips in the world may be far harder to contain than anyone in Washington ever imagined.